Hello, everyone. Have you ever watched a company announce something so massive, so game-changing, that you'd expect its stock to explode, only for absolutely nothing to happen? No jump, no buzz, no fireworks, just silence. Well, today we're diving right into a situation exactly like that. It's one of those stories that really forces you to scratch your head. We're talking about a tiny company, a massive promise, and a market response that makes no sense on the surface. So, let's set the stage. There's this company called Datavault AI, and it's small, as in really small. Its entire market cap sits around $50 million, practically a speck in the world of public markets. And then, out of nowhere, the company announces something stunning. They raise their revenue forecast for the year 2026 to a jaw-dropping $200 million. Yes, you heard that right. 1/5 of $1 billion. To put that into perspective, they're projecting revenue that is more than 4 times the entire value of the company right now. Normally, news like this would send traders into a frenzy. The stock would surge, it would run, it would rocket. You'd expect headlines like "small cap stock goes parabolic" or "investors pile in after huge forecast." But instead, the stock did absolutely nothing. Flat, 0%. Not a tick higher, not a tick lower. It closed exactly where it opened. And that weird reaction, or lack of reaction, is exactly what we're exploring today. Because it raises a very real question. If a company announces a future worth quadruple its size, why would the market ignore it? Is this one of those rare hidden opportunities that Wall Street simply doesn't understand yet? Or is this the kind of situation where the market sees something dangerous, something regular investors can't see at first glance? Let's unpack it. To really understand what's going on, we need to begin with why investors might be skeptical. Because clearly, a large part of the market isn't buying the dream Datavault AI is selling. When you take a closer look at the company's financials, things start to make sense. This company isn't exactly swimming in profits. They brought in around $2.9 million in revenue, which isn't terrible for a small company. But here's the problem. They posted a net loss of about $33 million. Let that sink in. For every dollar they earn, they're losing more than $10. That's not a sustainable business model. That's not even close. And when a company burns cash at that speed, investors know exactly what's coming next: dilution. Dilution is the nightmare of every shareholder. It happens when a company runs low on cash and decides to print more shares to raise funds. That means every existing shareholder's piece of the pie gets smaller, instantly. When the market senses that dilution is on the horizon, it pulls back. Hard. No one wants to buy into a stock today if the company will just create millions of new shares tomorrow. But the skepticism runs deeper than finances. It's also about identity, who this company was and who it suddenly claims to be. For years, Datavault AI wasn't an AI company. It wasn't a blockchain company. It wasn't in the business of tokenization or anything cutting edge. It used to be called Warsaw Technologies, and it made wireless audio equipment, speakers, hardware, physical devices. Then it pivoted, not a small pivot, but a complete transformation, into the world of digital assets, AI, blockchain, and tokenization. This isn't like switching from selling coffee to selling donuts. This is like switching from making bicycles to designing fighter jets. A total reinvention. And anytime a company reinvents itself this dramatically, the market gets cautious. Execution risk skyrockets. Can a team built around audio hardware suddenly become leaders in blockchain asset tokenization? Can they truly deliver on a goal this enormous? Can they compete in a field dominated by well-funded tech giants? That's what the skeptics are asking. And honestly, those are valid questions. Now let's flip the coin. Because while many investors are hesitant, others see this situation as a once-in-a-generation opportunity. The bull argument starts with one undeniable number: $200 million in projected 2026 revenue. If the company even comes close to that, if they deliver even 30%, 40%, or 50% of that, then its current market cap of $50 million looks unbelievably cheap. In the eyes of bullish investors, this isn't risk. It's a bargain. The technology they're betting on is something called real-world asset tokenization, or RWA. This is the idea of taking physical real-world assets, like buildings, factories, even energy facilities, and turning them into digital tokens on the blockchain. This industry is exploding globally. Big banks are investing heavily, or governments are exploring it, entire markets are being built around it, and Datavault AI wants to position itself right at the center of this emerging wave. This isn't just theory, either. They already landed a major deal with Triton Geothermal, a company in the energy sector. The plan? Tokenize geothermal assets and bring them into the digital world. To bulls, this deal isn't small. It's proof. Proof that someone out there believes in what Datavault is building. Proof that the technology isn't just smoke and mirrors. Proof that revenue is on the way. Maybe a lot of it. And then there's the CEO. Highly vocal, highly confident, not afraid to publicly put big numbers on the table. That alone excites bullish investors, because confidence from leadership can sometimes be the catalyst that gets things rolling. But no matter how good the story sounds, the stock chart is where the truth usually hides. On the day of the massive announcement, the stock initially jumped. It spiked early, exactly what you'd expect. Then the sellers showed up, hard. They smashed the price right back down, and the stock closed exactly where it started. That kind of movement creates what traders call a rejection candle, and it's a powerful signal. It tells us that when the price reached higher levels, the market rejected it instantly. There simply wasn't enough confidence to sustain the move. This creates three major levels. Resistance, around $2.15. This is the wall the bulls haven't been able to break. Sellers dominate here. Current battlefield, around 1.86. This is where both sides are fighting intensely. Critical support, around 1.80. If the stock falls below this, especially below 1.70, the bears gain total control. Right now, the chart is saying investors don't trust the story. Not yet. Now we bring everything together. We know the bull case. We know the bear case. We know the chart's verdict. So, what happens from here? These are the key things that matter. Does real cash start coming in? Announcements are great, projections are exciting, but at the end of the day, numbers rule everything. If these deals translate into actual revenue, sentiment can shift instantly. Does the cash burn slow down? If they keep losing 30 million+ per year, investors will expect dilution. If they tighten expenses and stretch their runway, confidence can grow. Does the company avoid issuing new shares? A dilution announcement could tank the stock. Avoiding dilution could give it stability. Does leadership follow through? The CEO made bold promises. If the company starts meeting milestones, the market will take notice. So here's the million-dollar question. Or maybe the $200 million question. Is Datavault AI a bold, visionary company making a brilliant pivot into the future? Or is it a high-risk gamble built on ambitious promises and unstable financials? Right now, the market doesn't have an answer. It's undecided, uncertain, waiting. The truth will show up day by day in stock movements, in earnings reports, and in whether those big projected numbers start becoming reality. And as this story unfolds, we'll be right here breaking it all down. Make sure to subscribe, stay tuned, and thanks for watching. This is not financial advice.